You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' music means it is time once again for a little program we like to call, around the Chicagoland vicinity and, of course, elsewhere, the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. So many programs for you guys to choose from. If you want to just learn about options, we got you covered. If you want to be a little bit more active and engaged, this program probably a good one for you, as well as a few others. If you're into the vol space, of course, volatility views. If you're an asset manager, RIA, maybe aspiring to become one or looking to choose one, well, of course, Advisor's Option got you covered. If you're into all the cool things going on in the world of futures options, well, This Week in Futures Options would be the right one for you. In the tech side, trading tech talk, and so on and so forth. Throughout the full spectrum of programming, of course, the easiest place to find all of that, theoptionsinsider.com. Someone just pointed out to me the other day that there may be an issue on the network page there on our website, which doesn't have the full archive. I think it only goes back to 2012 right now for some reason. We are looking into that, so if you're looking for it there, you're not going to find the full. If you want to go back to beyond 2012 for some reason, which I know some of you like to do, easiest place probably then is the mobile app, because that has everything in it. I think iTunes, a lot of the major outlets, the Google Podcasts, I think a lot of those will limit you to probably the most 50 or 100 recent episodes. So if you want our full network and go back all the way into the dark days of 2007, then probably the app right now is the best way to do that. Even though most of the individual shows on our site, you should be good. Just the network feed, there's so many thousands of episodes on there that it seems to have gotten a little crowded. We're working on it, though, so bear with us. And, of course, you can always check us out every Monday and Thursday live via Mixlr, Mixlr. Join us there. We'd love to hear from you. Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. You can ask questions, give the Rock Lobster a hard time, all sorts of fun stuff. See how the sausage is made before it goes through the nice grinder and the spices are added and it comes out on the network the following morning. So check us out there. And, of course, however you listen, on the app, on the website, maybe through a tin can by way of Maine and the Rock Lobster, whatever you like to do, hit us up with those questions, those comments. We do enjoy hearing from you guys on occasion. Every now and then, we do like hearing from that stuff. And, of course, joining us on the old program today, since I gave him some umbrage, let's bring him on first. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
I think I'm welcome back. I'm not quite sure. I'm not quite sure, to be honest. What do you know? Yes, it's good to be back. I just get umbrage thrown at me. I'm still surviving Henry's call and MGM, all these issues that plague my life.
The shame of the Flowmaster coming in and usurping, as he is wont to do on the old program. And we're also joined a little bit closer to home from scenic St. Charles by good old Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. To you as well, sir.
Always happy to be here, and I have no umbrage to claim as of yet, so it's a good day.
The day is young. The show is young, so we'll see. Let's stay tuned, though. Let's strap in. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block. Like the name implies, this is indeed the portion of the program where we break down what was moving, shaking, catching our eye in today's market activity. And pretty much a lot of green on the screen, particularly in one sector. That would be the tech side. Tech-heavy NASDAQ up nearly a full percentage point to end the day here. So nice rally ho for them. S&P, bit of a laggard, only up about 0.3%. And the Dow, quite the laggard, almost literally unched on the day out there in Dow land. So a bit of a Goldilocks, pick your poison out there in the broad indices today. A lot of that love for the tech-heavy stuff coming on the Apple side, up over 3.3 handles today, about almost 2.5%. On the day, flirting ever so close right now with 147. This one hitting new 52-week highs. I believe that is a new all-time high as well. Uncle Mike is our resident Apple guy, so he'll confirm that for us. But still, a lot of stuff popping off out there. You know, maybe let's get to it because we're going to get to Apple in a little bit anyway. Uncle Mike, your thoughts on what caught your eye today, this rally in Apple, and perhaps if you are I know for old time's sake, maybe, because I know you don't really have much of a position anymore, but just for old time's sake, what are you doing? What are you thinking ahead of tomorrow's earnings?
Well, Apple's a wild card a lot of times. From what it's really difficult, like with any earnings, of course, to say that they're going to beat, they're going to match, or whatever the case may be. But I think with Apple, a lot of times when they rally into the earnings, and this is just on my own vague memories of this, sometimes they will go down the next day, but then a lot of times the rally continues rather quickly. This is one where if Apple had more innovation, I would be in on it right now, but I think there's just a lot of excitement in the tech sector. And when there's a lot of excitement in the tech sector, Apple's a place with which a lot of people park money. So I think that's kind of more of what's going on in the world of Apple at this point in time, because I'm really not seeing any they've set the bar so insanely high for what their products are that I don't see it continuing to go to the 200, the 300 level like it did before. But who knows? It's Apple. That's the one comeback that pretty much anyone could have that you can bank on. And then the other factor to consider on this is that Kevin O'Leary, Mr. Wonderful, they had the CNBC stock mock draft, and Apple was his first round pick going into, I believe it's to see how you'll perform till January, and that's what he picked. So take that for what you will, but Mr. Wonderful is loving Apple right now.
There you go. Sold with both hands. I'll be the contrarian of the bunch then after that ringing endorsement. But, you know, it is interesting to see. You're right. It is rallying. Of course, they do have earnings tomorrow after the bell, so unfortunately not before the bell. Fortunately, maybe for you out there listeners, because you get another day to play around in Apple. Unless you're Uncle Mike, then, of course, the earnings are next Sunday. Weird Sunday earnings. Only seems to happen for him. I'm not sure how that works out. But you're right. It was rally ho out there today. And given the rally, not surprising to see a slight, ever so slight bias to the calls. Nearly, not even 2-1, about 1.7 to 1. A total of 651,000 contracts out there, about 410,000 in the calls, and about 240,000 in the puts. So interesting stuff out there. We've been talking about the skew. I think your cohort there, Mr. Meatball, was talking about it last week. Mr. Rock Lobster talking about the skew in Apple. It's getting up there again. It's getting. I'm not sure if it's as lofty as it was back in the $700 go everyone's got to have it Apple days, but it is. I think it's fairly rich. I was looking at our friend, the Flow Master, his service trailer over there today. I was looking at it today. It is in the 1 percentile for at least for 52 weeks. I think that data only goes back 52 weeks, so I don't have the full panoply of decades worth of skew data at my fingertips right now. But at least for the last year, we are in the 1 percentile when it comes to skew out there right now. So interesting stuff. Also at the money vol, fairly inexpensive out there. So it makes for an interesting combo, which we asked you guys about. We'll get to your results in a little bit. I'm sure Mr. Rock Lobster, that was probably a popular topic of conversation out there in the pitch chat. So what were the pitch chatters saying about this, and what else is catching your eye in today's activity?
I guess my thing is I'm a little frustrated. Although I don't mind just being long, but I feel like the only thing you really can do is just buy calls. There's nothing. There really is nothing around as far as pitch out. Mark liked Apple enough to go buy calls on Friday, and he was cashing them out today. And I think looking at the skew, looking at the upside curve, that we traded 994 VIX. There was really no earnings out. There was no, you still got that French election, which mattered a couple of weeks ago, but doesn't matter now. Vol went much lower than I thought it would go. The vol products today. But ultimately, those futures are going to follow the VIX cash. And right now the VIX cash is 10. And unless something happens, it's hard to believe it's going to be 12 or 13 anytime soon. It's what it is. Now, normally when they tank the vol this early in the week, it usually comes back a little bit because there's a little bit of nervousness into the weekend or something. But I said this before. I don't know how many times on the show the Qs were my favorite performer for the year. I think they had underwhelmed last year, even given some of the strong performance. And they're certainly catching up. I think besides live cattle, I think they're the number one performer on the CME this year. So is there more room? I don't know how high they could go. I guess they could start actually getting multiples. They were all kind of, low teens for the most part. And now all of a sudden, Google's starting to get a multiple. Apple's not cheap anymore. Although Apple in October, you could buy it for $102. Amazon was 50% lower in October, I think. So, massive, massive, massive runs in the queue. I don't know how long it's going to last. I think the Qs have had a pretty good year already. And as far as the rest of the market goes, it's kind of been lagging a little bit. Banks raced ahead. Okay, we're at almost all-time highs with the S&P 500. I think what's really lacking now is sort of like the smaller, more, industrial, like gold, commodities, stuff like that. Oil is just, they're lagging. All of the oil producers and explorers, all the energy producers, are really kind of suffering as oil has not really risen. So that's still a pretty big part of the market cap. So if you look overall, can the Qs still run? Yes, I think if they like Facebook earnings, if they're pretty good, if they like Apple earnings, which at this point now, Apple's not. I mean, it's still what I would call a reasonably priced company, but as Mike says, for some reason, they don't have new products per se, the new blockbuster product that gave them that massive growth, but they still somehow keep finding ways to keep people into iPhones and keep getting them to buy new ones. Although that is kind of a one-trick pony, but it's still a gigantic and bestest one-trick pony there is out there. So, and overall, I think just volatility is very cheap. I mean, the trades that have worked the best or concepts have been just kind of long vol and long calls, and take your pick of any stock in the Qs or just the Qs, because you're not. They're cheap enough that just a small rally in volatility, that kind of strangle works. I'm going to keep doing it, and and see what happens. It's not very exciting, but those are the trades that have been working, because you can't really sell a lot of equity volatility because you're just getting moves. Amazon was up another $25 today. We were looking at just time spreads in the morning, and by out of the money call time spreads, and by mid-afternoon they were already at the money. So it's one of those markets where it's kind of like 1999, 98, 97, 96. At least from that point of view, where there was continued movement up, and that's what we got.
All right, thank you for that, Mr. Rock Lobster. There, things popping off over there in Maine. Sounds like too active stuff over there. I think someone else is fighting you for the bandwidth over there in mainland. Before we move off Apple really quickly, you made an interesting comment about, they keep getting people to buy iPhones. I did see an interesting nugget. Again, there's always naysayers for all of these numbers, and Apple certainly has not been light on those over the years as well, even in their heyday. I did see an interesting stat the other day, though, too, about how when they announced the iPad, I believe it was in 2010, it was expected to be, I think, around this time, a 150 million unit a year type product. And there's, I think, so far, lifetime to date, they've only sold about 350 million. Some, I may have those numbers pretty much a little bit off. I'll have to look up the exact numbers, but it was somewhere around nowhere close to what they thought the iPad would be doing right now. Hence, when we saw the refresh and revision to the iPad lineup recently, it wasn't one of these big showcase events. It was kind of the antithesis of that. Apple really just they don't usually do this. They snuck out a little press release saying, yep, new model, kind of refresh, lower price point, here you go. And you don't usually see the big grandiose stage presence in the event and everything else, and they didn't do that. So maybe that's a bit of a tacit acknowledgement that this product that was supposed to be a pillar for them is maybe surprising them. Go figure. People don't go upgrading these devices as often as perhaps they thought. But then again, you're right. People still manage to get them to buy iPhones. So maybe all that is just noise into the big iPhone C. Uncle Mike, I know some other things are really catching your eye out there too, including your favorite SPY and perhaps some SPY volatility. I know last weekend, or I should say last Monday, was a great awakening to the impact of volatility for you. So how has it been going since then?
Quite interesting. I think just like what I talked about on Thursday were the 6 factors of option pricing a little bit in the strategy block. And what I want to go through real quick is the trade that I had mentioned on Thursday that I had made on SPY was bought premium, bought the 235 call for May, and then sold the 240 half call for May. And what's interesting about that trade is that right now there have been 3 days have passed, market has risen, well, it's actually about the same at this point, and about 20% of the premium is out of that 240 half call that was sold. Now, theta does play a part in this, but even though there has been a few days that have passed by, vol has continued to go down, or I have a hard time believing that theta took out 20% of the option value over the course of a couple days. So implied volatility went down along those lines. And so with that being said, this just shows a way with which you need to look at all the factors of option pricing when placing a trade, because overall the VIX has come down over the course of the same time frame. Another interesting move, I was talking a week ago on how I was looking to possibly get out of some short options, but couldn't quite do it last Monday. Well, this Monday was the day. I was a few pennies away, so I was using a 22.20 put spread for September as a hedge on XLF, and I got out of the 20 put today. It had made about 80% of the profit. I got out of that for 16 cents. We had gotten into it couple months back for 80 cents. I'm sorry, 81 cents. So that was our cue to get out of there. And then the other thing that we were doing was a call spread on the call side collar. We were doing the 24-26 call spread, but today with vol as low as it is, and it was even more beneficial to do now than it was a couple months ago when the price was higher and also when the price was lower. This is pretty much all of volatility making this magic happen in the world of options. We rolled the 26 call down to the 25 call for a debit of roughly 26 cents. And so we're excited about that, and that now we paid 40 cents to adjust all these positions in the options today. And the benefit of this is that we have total downside protection now. And if the market does go up immensely, then we have upside from the 25 level on up now instead of from the 26 level on up with XLF. So when you get a situation like this, when vol goes down rather quickly, and you have the ability to buy some premium on some longer term options like we did. This one's out to September. We took advantage of it today. And the same can hold true if vol were to go higher and you have the ability to sell some premium if it makes sense within what you're doing. And this last week was all the stars lined up, so to speak. And that's what we got going on in the low vol world today.
I'm glad to see you're doing some adjustments out there. 'Cause, the collar in silver kind of been a big bust, from an adjustment perspective. So not from a performance perspective.
Bust.
Not from a performance perspective, but from a content and adjustment perspective, not so much. So I'm glad to see you're actually doing something. I was kind of worried about you sitting on your hands all day in St. Charles, just eating Skippies, gyros, and lemonade, which is delicious, admittedly.
There you go. Good old Skippies.
Gotta love. That's like the third plug they got on the show. I think it's time for them to cough up some sponsorship dough. Really quickly before we move out of the trading block here, it is that time of the month again. It's time to look back on last month and see how it performed. How did the options market do last month? Let's see. We have the answers for you. Our friends over there at OCC putting out their numbers. Of course, OCC, the Options Clearing Corp, aka the other side to all your trades out there. They announced that overall their total cleared contract volume for April was down 6% from April of last year. So last year was about 320. This year was about 320.5 million. Last year, nearly 340 million. So a sizable decrease. ADV is also down 1% over there for 2017 so far at OCC. Again, that's total across all their cleared products. That includes, futures and stock loans and a bunch of other stuff, kind of muddying the waters. Let's dig down a little bit further into options. Exchange listed options, obviously, that's our bailiwick here. That volume was 309.6 million contracts in April. That was a 7% decrease from April of last year. Overall, year-to-date ADV for listed options down 2% so far this year. So a pretty sizable drop down from last year, which was already a decent decrease, about 2% overall decrease last year as well. Digging down a little bit further into the rabbit hole, overall equity options volume, 269.5 million contracts. That's a 10% decrease from April of last year. That includes cleared ETF options volume of 129.3 million contracts. That's actually a 4% increase. So one shining ray of light in April there compared to April of last year. And last but not least, as it has been for the last few months, the really strong, almost blinding ray of light out here in the options world was index options. That volume up 28% from April of last year with 40 million contracts. So interesting stuff. Any surprises there for you, Uncle Mike or Rock Lobster, before we roll on into the odd block?
Can't say I'm surprised.
No, it just, you've got lower vol, and the indexes, listen, in a bull market, options level bull market, they like low vol. People just buy calls. It's a lot easier that way. That's all I'm going to say. And I don't know when this is going to stop or end, even with all of the, let's just call it Washington controversy, although you don't see all the stuff that I think was a big issue, let's say a month ago, they seem to be not quite on the front page anymore. Like the Russian connection and all that stuff. So I guess if they're rolling back regulations and rolling back taxes and whatever, the market likes it. So for whatever reason, it's going up, and VIX is 1011 as we speak.
Speaking of speaking, let's do it. Let's do some more of that. Keep right rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time once again for the funky part of the show. It's time, for the Odd Block. Indeed, the portion of the show where we break down the weird, the wild, the wondrous, the sometimes head-scratching paper that is lighting things up. Speaking of head-scratching, we had a trade last week that was fairly head-scratching in and of itself. It was, of course, the infamous now time stupid, apparently. Well, we originally said it was a roll. The Rock Lobster was very heavy on the roll side, rolling, I believe, some short premium. And then we have actually the Flowmaster, if you remember, chimed in. Henry Schwartz over there at Option Alert, chiming in last week saying, actually, it looks like it was a roll, but actually it was a stupid. And this week, Mr. Rock Lobster, a time stupid. How many times do we see that? We see stupids very rarely, let alone time stupid. So that made it doubly interesting. And now Mr. Rock Lobster looks like at least the option portion of that looking pretty good. Remember, I don't know if you weren't on the show on Thursday, Mr. Rocklobster, but we had the Flowmaster on. I do believe he said this was done tied. So in which case, perhaps not as good as it initially seemed, but still, this one's still on your radar. I think this one's still sticking in your craw, isn't it?
Well, it's again, as we prognosticate all of these things, it's sticking a little bit, but either way, I still was long with my bias, so that's better than nothing. But right now, I think both those call strikes, the customer has at least a double on them. And I thought this was a pretty good tell for the markets really want this, all these, the Macau, China gaming companies, all those things just lifted huge after this. So maybe there's some bullish action for Chinese gaming and all the casinos that own Chinese gaming there. So either way, it's going up. This guy made some money. And I was looking for the tide block. I could not see it either. It could be a stock replacement, not sure. But either way, it seems to be doing okay.
Yeah, interesting stuff out there. We got some more in tune for you listeners. I'm just keeping the tweets flowing here while we're breaking down the show. I wear many hats here during the show, particularly when half of our staff is out and about. So it all falls to me to keep you guys informed what we're talking about here as the show goes on. Next up on the old program is Neighbors. Ticker symbol NBR. I talked about Neighbors before. Neighbors Industries Limited. If you're not familiar with this one, listeners, they own and operate land-based drilling rigs. So there you go, land-based drilling rig fleet. Interesting, interesting business. Closing today at $10.14, off about 20 cents or about 2% on the day. It's a name that does about nearly 5,000 contracts a day, doing nearly 19,000 today, about 11 to 1. Puts over calls, and if you're wondering where all that was, all that juicy put paper, it was pretty much in one size trade here in May, so front month. So not wasting any time, not rolling out to Jan or anything like that. Probably a bit of a roll, but just straight up, straight down in this case. It was the May 11-10 put spread going up on a bit of a ratio. Looks like 4,500 of the May 11 puts going up for 84 cents, over 10,000 of the 29s. This has all the looks, all the hallmarks of a bit of a perhaps house money roll, because a couple of things. First off, the stock gapping down way shy of the 11 handle, so these puts now deeply in the money. Second, we also usually a characteristic of these types of house money rolls is when people do more size on the second leg. That's usually a good indicator that they're sitting on some house money. In this case, he's doing a little bit more than 2x on the downside leg. Again, it is pretty aggressive if it did indeed go up that way. If it's opening on both sides, that's interesting as well. We'll get to that in a little bit. Of course, didn't see any stock going up with this bad boy. And again, look at the year that's been so far out here in Neighbors. It's been an interesting one. Hit a high of not quite 20. Looks like about 19, almost 19 out there back in January, actually. And then it's kind of been on the downward trend ever since. And these days, it's hovering right around. It's not at 52-week lows. That would actually be back in the 7 handle back in May of last year. So it has seen worse days, but doesn't seem like the trend is their friend right now. And certainly, if this options paper is what it appears to be at first blush, then our friend here ain't buying what they're selling either. Mr. Rock Lobster, how are you looking at this one? Are you thinking this one is another stupid? We got revenge of the stupids here. You think it's opening buy on both legs? You think he's buying and then house money like I was thinking? Are you thinking it's short and then buy? What do you fall on this one?
I think it's house money, and even Henry's got to agree with me on this one, even though it might pain him to do so. I saw them before earnings, a pretty big bet, paying 32 to 34 cents for those 11 puts. And they're selling them at what price now? 80, some big dollars, right? They're selling these things for today. They sold them for $1.80. Let's see, 80. They got 84 cents for them. So they've almost tripled their money on the 11s, and then they're going in and doubling down on the 10s. So, and this actually, from a volume perspective, most of the paper, because I see there's always paper in Apple and Google and Tesla and stuff like that. Most of that has been kind of bullish to uppy bullish, but those stocks are going up, so that's the hard. It's not. When they go up, who knows? But the paper's been kind of consistent in direction. These, a lot of the explorers, energy driller, stuff like that. I know Tucson follows the XLE, but more XOP type stocks, they really have been having a hard time lately. Like Weatherford, there was like almost 100,000 calls bought in Weatherford over the last couple of weeks, and the stock had awful earnings. I don't know if they were shorting the stock massively against it. But Neighbor, this is another one where somebody bought a lot of puts, and they're doubling, almost tripling down to lower prices. So I feel like there's like a shoe to drop with the energy sector that I'm not just purely from the paper buying, because it looks like it's more than hedging activity, especially when they, double down or even triple down on a particular trade. I mean, they rolled almost the entire premium into more puts for this MBR trade. So very, very strange. So when the rest of the market is kind of, running, how weak the whole drilling sector looks overall. It just doesn't look great.
Speaking of funky sectors, this is one we have not had on the show before. They are the Chicago Bridge and Iron Company. Maybe they made those nice fine bridges right outside our studio here on the Chicago River. Ironically enough, they're a pet food company. How weird is that? No, of course, they are actually, what their name implies, they make bridges and iron. They actually provide a lot of infrastructure to the energy space in particular. This ticker symbol is CBI, closing today $30.17. Pretty much unched to end the day here. This is a name that does about 4,000 contracts a day, so actually not bad paper here for good old CBI. Today doing about 5x that, a little more, about 22,000 and change, about 20 to 1 calls over puts, about 21,000 on the calls and about 1,000 on the puts. So let's talk all about the puts today. Nope, we're getting into the calls, and in particular, it was the Jan longer term, a little bit longer term paper than what we just talked about here, where someone's rolling. That's another thing about that roll that was kind of interesting, was usually in that kind of case, you got some house money. They usually use some of that money to buy themselves a little bit more time. Our friend there did not. He's saying, you know what, this downside's coming, and it's coming hard, and it's coming fast, and I want to keep myself in the May time frame, which is kind of interesting. Wouldn't be surprised to see our friend maybe having to roll a little bit out a month or so if he didn't buy himself enough time, but we shall see. We'll table that one for now. Again, talking here about longer-term paper here in CBI. What did we see up here? Well, we saw pretty much a 10,000 lot of the Jan 2018 35 calls versus the Jan 2019 45 calls. That spread going up for 34 cents. And it looks like our friend is just keeping the yield, I use that in quotes, the yield party alive here for another year, rolling up a bit as well. Again, open interest about 10,000, about 11,000 contracts actually on the 35s, and nothing really to speak of on the 45. So our friend's buying himself a little bit more yield and also a lot more upside, about 10 more handles to go as well. If he had kept himself on that same strike, it would have been about, looks like about, at least almost $2 he could have come out for that one, about $1.80 or so. So it would have been perhaps a little bit more attractive from a yield perspective. But no, he went for the 34-cent option and instead gave himself some upside. So if you're a long holder, as I would wager our friend here probably is, then perhaps you are feeling what this guy is selling as well. Looking back at the year that was out here in good old Chicago Bridge and Iron Company, which I'm informed is based in Arkansas, in which case that's just that's not cool. They should not steal that name. That's not appropriate. All right, let's look back at the year that was out here in good old CBI. They reached as high as about 38, nearly 39 bucks back in July of last year, and they've kind of been vacillating around ever since, getting as low as about 26 and change back in September. It's not that long after that, and then kind of rallying up again to like 36 or so. So it's kind of been in this interesting range, about 26 to 36 for the better part of the last 6 months. And our friend here, perhaps feeling that that upper side of that range is going to be tested within the next year, and willing to give up quite a bit of yield to do it. Mr. Rock Lobster, what's your take here on our friend? We've talked about a lot of, shall we say, interesting attempts at getting some quote unquote yield. I got a feeling if the Viceroy was on the show right now, he might take some umbrage at giving up pretty much an entire year's of upside beyond the 45 strike for a whopping 34 cents. Where do you fall on that, sir?
It could be on this one where here they're trying to roll out. What was hard to tell is a bunch of these options traded about 2 weeks ago, and it's hard to tell if they're just trying to close the 35s and roll into the 45s a year later, or if they want to just do more, meaning own more 35-45 spread, but now they're doing a time spread. So it's not totally clear. It does look like they're buying the 35s. I don't know if they're adding to the position more. I'd have to check on the open interest if there's huge open interest growth or not. But it does look suspiciously like kind of a 10-point, time diagonal spread, if that would be the case. Or they're just closing out a 35 position. But it's one of those ones, the prices are a little bit in the middle. And I just have to check on the open interest tomorrow. But it looks like they want that, that yield going a little farther out. 45 is quite it feels like they want that. I think they're thinking that's free money out there, or it's price-wise, it's reducing the cost of their spread to very low dollars. If they're paying 84 over 50, that's only 34 cents for the spread. So I think what it ends up being is kind of a cheap time diagonal, but this one we're just going to have to look at the open interest to see for sure. So essentially it's kind of like long the 35-45 spread for a year, and then we just see where it ends up with the 2019 45s being sort of the yield generator, as it were.
Yes, the massive engine of yield. That is the Jan 2019 45s. This might go down as one of the more interesting yield plays. But you're right, there are some elements to it that merit further analysis, discussion. I say we'll file this one away. We're going to have to file it away for a while to see if this one really makes the grade. But we can do that. We can file some longer term ones away. Meanwhile, though, let's keep on rolling. It's Monday. It's time for your Q's and our A's. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the program where we do the unthinkable. We talk Apple and all kinds of other fun stuff. We ask you guys questions. You guys ask us questions. It's all kinds of fun. We kick things off. Well, it's not really a question of the week today. It's more of a pop quiz kind of thing because the earnings are coming off tomorrow. We asked you guys out there talking Apple. Apple had a good day today. It's popping off tomorrow after the bell. We said, here's a little pop quiz for you. Apple, at the time we posted this, right around 146.5. That weekly at the money straddle, right around $5 or right around 3.5%. The 30-day implied vol, right around 21%. And the weekly, so expiring this week, 155, one double calls, trading 27 cents on the downside. The 138 puts also trading right around 27 cents. So we asked you, what would you rather do? Would you rather buy that straddle? We even gave you a second option. Can't squeeze a lot into Twitter, but we said a second option. Would you rather buy, some of you, we gave you the wings. Would you rather buy the Iron Fly as well? Couldn't fit the Iron Condor. Didn't give you enough wings for that anyway. So we said buy the straddle or the fly, or sell the straddle. Easy for me to say today. Sell the straddle / fly, or just straight up buy the call, or just straight up buy the put. Mr. Uncle Mike, let's start with you. What are you feeling, and what do you think our audience is feeling?
Well, what the heck? It's low vol. Let's buy a straddle, for crying out loud. If you can't buy a straddle now, then when can you ever buy one? I'm buying the straddle, and I think the audience is going to come along with me.
Wow. Uncle Mike, what have you done? What is this VIX event? What has this done to you, this great awakening? You're just buying vol willy-nilly. You're just rolling positions months ahead of time. You're just crazy town out there in Uncle Mike land. Mr. Rock Lobster, restore a sense of sanity to the program, sir, if you can. What are you feeling? What do you think our audience is feeling?
I think the audience is feeling buying calls just based on the upside curve. So I think they're just buy. They're buying. They're buying calls, and it's the good old nothing. We've got nothing like the good old days when people want Apple to go up and up and up. So I think I'm starting to smell that the good times are back again, although it has already moved up 50% since October, as well as Netflix. So they've already, a lot of the ship has sailed, but it's not going to stop people from buying calls.
Yes.
You are buying what they're selling, sir. In this case, they are buying what you are selling to them because they are buying those calls en masse. It was over half. Now it's trickled down to just a mere 47% saying they want to buy that call. You're right. I am getting a little bit of that vibe of the old days again, which is weird. You're right. They are, shall we say, these valuations a wee bit lofty. But that's not spooking people, at least when it comes to the stock today, or indeed to our poll. A distant second is sell that straddle / iron fly for 26%. Number 3, 18% going the Uncle Mike Crazy Town way, buying that straddle iron fly, and only 9% want to buy a put. So no one's touching puts out here. So starting to be reminiscent, shall we say, of those go-go days out there in good old Apple. All right, let's see. We got questions here. Let's go to Ron Urovich. Name sounds familiar. I believe he's written in the past. He says, I hear you mention the term stupid, as in that's a put stupid or that's a call stupid. Is that a strategy or just a term of endearment? Thanks, Ron. Well, Ron, in my case, it's a little bit of both, more of the latter, because I don't really view it as that great of a strategy. So I think the name is quite appropriate, and hence it did get the name for a reason, let's say, after all. They don't just come up with these names willy-nilly. Well, in case of the Iron Condor, they kind of did. But other than that, some of these names have a bit of truth to them, a little bit of meat on the bone there at the end of the day. So yeah, I'm not a huge fan. So for me, it's more of a term of quote-unquote endearment. But it is a strategy. And its strategy is, quite frankly, a typical spread. We were just talking about vertical spreads, could be time, whatever you think about. Spread usually involves buying one leg, selling another leg. It's your most basic spread strategy. A stupid is when you buy one leg and then you buy the other leg as well, or that you sell one leg and you sell the other leg. So you do both legs the same direction from a buying or selling sense. And it's called stupid for a variety of reasons. I'm not a huge fan of it for a variety of reasons. I've gone into them quite a bit. I won't belabor them too much, except for the fact, obviously, if there are some reasons why you might want to do it, maybe delta mitigation being probably one of the best, maybe spreading some of your costs around. I tend to view it more as you're usually better off if you want that viewpoint really consolidating on most of your capital, what you can on the strike that you feel has the best bang for your buck, rather than spreading it out. You want to average in. I understand that, but still, I've never been a huge fan of that. The one time I do like it is when it's, of course, that nice rolling stupid where you have some inertia, you buy calls on stock X and the thing just takes off and you're like, well, I maybe want to buy some more. I like it even more now because it's got some change of fundamentals or whatever, and for whatever reason you don't want to sell those other ones and you don't want to buy those, they're too deep in the money, not too expensive, so you buy some more at the money strike. I could understand that. I call that more of a inertial stupid, a little less offensive. But that said, Uncle Mike's been the biggest defender of stupids. He loves them, he uses them all the time, so I'll make him defend why they're so great. Go for it, sir.
Mark, it's okay. We live in 2017. You can admit that you trade the stupid. Every time, if you go through this show, I think there was a time a couple years ago where I think I will give someone one free quarter at RCM if you can find me to go through all the 600 episodes that we have and find the 10 times that Mark Longo has always said something positive about the stupids, even though he says negative things about him. So I'm with Mark and what he says. I like the inertia stupid, as he puts it, but I'm not. Mark never lets me get away with bad trades, so I can't let him get away with it either. Mark is a closet stupid trader.
I take deep umbrage, deep umbrage at that, sir. I'm just tweeting out your offer for anyone out there who wants to take you up on it. Free quarter, it's not a bad deal. If you can, let's see. I'll put nice. I'll save us a few words. There we go. Nice comments about stupids. There we go. But yeah, it has some use cases. We've debated that quite a bit. We won't get into that. I can send you guys links to shows where we debated this ad nauseum here. But yes, long answer to your question here. Short answer to your question, Ron, is yes, it is a strategy. Also a term of endearment when it comes to me. And by endearment, I mean the opposite. All right, let's go on to, this is a live question here from Let's Make Best. I love some of these handles. He has kind of the oldest question in the options book. We kind of get this, seems like, on a regular basis, but it's good to maybe revisit it every quarter or two, particularly now around earnings time. People are weighing this decision. He just wants to know, quite simply, which broker is the best for options trading? Again, we've gotten this before. It's kind of a little bit of a subjective thing. Obviously, what you mean by best varies depending on people. The way I tend to quantify it is if you're kind of new to the game, you need a broker that's going to hold your hand, have a lot more education offerings and things like that. Then you want to go with some of the brokers that focus a lot on those types of offerings. Our friends over there, obviously at Trade King, do a lot on the education and content side. They have Brian, one of the few firms that still has a lot of dedicated content education guy there. So he's doing a lot of education. Obviously, you can check out what they do on our network as well. Over there at OX, also used to do a lot of education, not as much anymore. That was kind of a big push for them back in the days. We also saw, some of our partners over there and some of the other big brokerage firms. Toss still does a fair amount of education activity. They have their swim lessons room over there where you can go in and kind of sit in there all day if you want. In fact, they would love you to do that kind of thing. So if you like a hand holding, some of those ones are good. If you're more on the other end of the spectrum, you're super hardcore, high end, you want good deals and a lot of functionality, kind of hard to beat IB for a lot of that. On the flip side, if you're a new broker, a new customer, stay away from IB. They don't want you. They've made it very clear. They want the higher end guys. They're not going to hold your hand. They have very little in way of customer service there. So if you want that, stay away from IB. But some of the higher end guys like Toss. I know some of the hardcores. I know, Andrew, you like it as well. I'll let you extol their virtues. They've been on our program, on network in the past as well. They've been on this program, in fact, as well. Lightspeed kind of designed for options traders. So if you like that, if you like the live vol tools and everything else that kind of goes into the live vol platform, they have that available for you over there. But again, that's for the higher end guys. So you got to know what you're getting. And then, of course, there's a lot of good brokers that play now in that kind of, I'd call it that middle area as well, the basic to intermediate and semi-pro kind of retail, which is, of course, our old buddies over there at, I'm not sure what they're calling themselves now, Option House by E-Trade or whatever. They have a good offering in terms of a good combo of good platform, good amount of education material coming in for some of their other outlets, as well as decent rates. So it's kind of a nice little Goldilocks fit there as well. But again, it depends to you. I mean, you might have a particular strategy that you really love, that one broker has the best rates on and the best, drop-down menu, easy to use functionality for it or whatever. So it can get really narrow for people what they like, but that's kind of a broad overview. Mr. Rock Lobster, I know you like live vol, so why do you like that one so much?
The vol data is good. It's solid. I'm more of a vol trader, which of course makes this market gives me more fits because there's really no trending vol except for down. But other than that, and it's laid out well as far as looking at individual vols. They have good vol charts. It's easy to set up a trade and do a simulation and just take a look at positions. So we also use it for the fund as well. So I mean, it works well, and it was designed basically by market makers around that kind of interface, which I'm used to anyway. So there's a lot of reasons why I like it.
Yeah, Uncle Mike, I know you're obviously a big fan. You got a good deal over there at IB. So is that your pick? But again, that's a bit of a caveat for people who aren't as sophisticated. So where do you send maybe that guy, the basic to intermediate options guy? Who would you pick for them?
We have relationships with 3 brokers right now, TD Ameritrade, Interactive Brokers, as well as MoneyBlock / Trading Block. So we don't, I'd say I agree with you with what you say about IB. I mean, everything's automated there, in that if you know how to work the system and play the game, and I shouldn't say play the game, but if you really feel comfortable without having access to a live person, then IB would be a good fit for you. One of the reasons that I don't personally do any of my trading over there anymore is because there was just one time to where I literally had to, their system was down, and I had maybe a 20 lot trade amongst about 4 or 5 different accounts with 1 minute to go in the trading day. And I needed to make sure the position was hedged for the weekend. Like, look, I need something done right now. And they said, well, there's nothing we can do. Just manage the risk your best. Now, thank God I had some very fast fingers and went into every individual account and rolled the position that I needed to. And the BBI was actually very high right after that trade, but that's another story. But my point is that if you do run into a pinch, IB is not the broker for you. We just have a hedge fund that's over there, and it works well for his hedge fund accounting reporting, and that's why he likes it. But I would say that TD Ameritrade for a beginner trader is probably the way to go. And you can learn on the Thinkorswim platform, and that's what we like.
I always love squeezing in more questions. We can squeeze in one more. We can do it. This is a related one. We kind of have to do it now. We just did the last one. This one comes from Shark Cake. I like that. I like the handle. He says, I've been approved to trade options by my brokerage. Well, congratulations. He goes on to say, but I've yet to execute my first trade. Yes. Big decision. Which trade do you recommend? Interesting. Well, I guess that depends how specific you want us to go. You want us to give specific time and an actual trade? I'd like to stick with this kind of question a little bit more of a basic strategy. I think maybe you guys have seen something different, but whenever I see people, coming to us with this path and, asking this type of question, they usually tend to follow a similar trajectory, which they typically come in looking to express some sort of directional bias on an underlying. They want to buy calls on Apple. They want to buy puts on Facebook, whatever the case may be. They want to use the options as a proxy for delta, proxy for getting some directional exposure to the underlying. They start to get a little bit more advanced and they start getting into spreads. And then eventually, maybe over time, they start to learn some of the aspects of premium selling as well. So maybe they flip the script, they start selling covered calls on their stock, they start using short puts. That's kind of the trajectory I like them to go. But I think actually, I know it's a little counterintuitive for some people. I think if you start off with just, some simple basic short premium strategies in addition to your long premium, or long stock, that's a great way to start. Covered call is, that's usually people can wrap their heads around that one fairly easily. They can see the use cases. It's not quite set it and forget it, but it can be depending on how you set it up. And so it's not as much babysitting management, particularly if you're not concerned about the underlying getting called away. That's a good place, I think, to start for a lot of people as well, because you already have the stock. You're already trading stock. So using options is a way to augment or maybe even replace your stock. Same thing on the downside. You start looking about getting long some underlying. You want to buy stock X at this point. Instead of working a limit order buy, you sell a put there. It's a little bit counterintuitive as well. But once you start wrapping your heads around that, you start seeing the value added of that. It's a demonstrably beneficial thing. And you don't really have to do a lot to do it. You can really tweak your returns just by doing those two little simple things. Then, of course, you can go crazy like the folks at RCM and start doing some wheel trades and really get all kinds of crazy. But for now, I think those are two great ways to start. People usually start long premium. I'd like to see them start the other way if I possibly could, if I have any say in the matter. Uncle Mike, what do you feel, sir?
I would agree on that one. I think that if you've never traded a stock before, you probably shouldn't trade an option until you at least try to trade a stock, in my opinion. So I would suggest a covered call also, because a stock is something with which most people, if you're trading an option, you should have the understanding of a stock. And then it's a good way to dip your toe in the water. There's a time to just dive right in. If you're taking your kids to the swimming pool in the middle of June and the water's a little bit chilly, dive right in. But if you're trading options with real money, dip your toe in the water.
Mr. Rock Lobster, last word to you, sir. What do you say on this contentious issue?
I can't disagree with Mike. You do probably best to dip your toe in the water, but if you really want something, I still like the Qs, but I would pick some sort of medium-term call. Instead of just buying one stock, just make it easier. But yes, start small and understand your tolerance for not being right, because that's usually with options. People tend to start too big too fast and then get grumpy afterwards. So start small and learn something.
Speaking of grumpy, Uncle Mike, you like his passive aggressiveness there. He's still mad that I brought on the Flowmaster from last week because you said you agree with me. Uncle Rancher comes on and says he agrees with you. So by the transitive property, he should say he agrees with me, but yet he refuses to do that. So therefore, hence, he still has umbrage in his soul. So let's keep on rolling before he gets too upset. Into the final segment, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is the portion of the show where we break down what's lighting it up for the rest of this week, at least till we can all gather here together again on Thursday to discuss some more options, wit, wisdom, unusual activity, a lot of things. Quite a few things popping off this week. It's all earnings for a lot of you out there this week. Of course, the big name tomorrow, Apple, coming off after the bell. We already broke down myriad things about their straddle and everything else like that. If you want to vote, you haven't voted yet, got a few more hours left to get in there. It's a pop quiz, not for the whole week, so get on over there at Options. Make your voice heard if you have not done so already. Wednesday, we got we got Facebook and some name I don't think maybe you have never heard of called Tesla. That one popping off on Wednesday as well. We've got Fitbit also coming out later this week. I believe they're on Wednesday as well. So a lot of interesting names. Kind of pick your poison, pick your sector. There's a name coming out in that range for you. You got Marriott. I think that's next week coming out as well. So a lot of big names popping off this week. Of course, Andrew's favorite, Neurocrine Biosciences, coming off this week. So a lot of huge names coming off after the bell. Can't forget Zynga as well, one of his other favorites, coming off on the 4th on Thursday. So if you want to trade options on a less than $3 stock, there you go. Have at it. But a lot to sink your teeth into. I'm going to keep him muted for a minute because he's just spouting off all kinds of nonsense. Instead, let's go to Uncle Mike, who's less umbrage-filled right now. Uncle Mike, what are you watching for the rest of this week, sir?
Well, I'm sounding like a broken record again, but I think it's macro. I think that today the media's deriving is Trump said it would be an honor to meet with the head of North Korea, but is he playing a chess match in terms of trying to bait him into actually wanting to meet so he can tell him that he's going to kick his butt? Is that that's a very big issue, I think, if it comes to fruition. So I'm watching things macro in addition to all of the earnings that are happening. And I'm still just fascinated by this low volatility. Have I mentioned that?
The Great Awakening. We'll have more time for that on Thursday, sir. Meanwhile, Mr. Rock Lobster, hopefully you've cooled off on your umbrage, sir. What are you watching for the rest of this week?
I'm still hot, white hot I am. I'm wanting to see if the floodgates open, everything just goes higher because, the only thing I would say is, we've got Apple, Facebook, a lot of the top line. I still think the tentacles of the internet are going to grow, and the upper players are just going to be more dominant. So right now it looks like it's kind of feeling that way, and the next thing would be any way that you access the internet. So either Google, Apple, people just won't give up their iPhones, and that's what. And I'm expecting. Here's my crystal ball. You should see a 9 handle for your show on Friday.
There you go.
9 handle for VIX.
Between now and Friday, or on Friday itself?
Well, we already had a 9 handle, but on Friday when you're doing the show, it will be trading in the 9 handle.
That's true. We did hit it today. That's right, 990. So yeah, there you go. Extra crystal ball. There you go. Look at you. Quite a swing between you and your cohort there. 16 a week and a half ago, and now getting a 9 handle on the other end of the spectrum. Crazy things afoot over there in the land of the pit. Speaking of crazy things, time to bring this crazy show to a close. But before we go, let me check back in with my cohorts one last time. See what they're cooking up that may even interest you. Who knows? We'll find out. Let's start off with Mr. Rock Lobster. Let's go backwards around the horn. What's cooking in the land of the pit, sir?
We have an Iron Condor class on Saturday. We make believe that there's some premium to sell.
Yes. Sell a year's worth of premium for 34 cents. You too can learn that now in the masterclass.
Exactly. Or don't.
Yes, or when maybe perhaps as Don S. would say, when not to sell. Head on over there to optionpit.com to learn more. And Mr. Uncle Mike, what's cooking in the land of RCM alts/MISC/futures/wealth advisors?
All sorts of exciting stuff, but if you are looking for a financial advisor who does not run with fear when he sees a 9 VIX, feel free to contact me. My name is Mike Tusaw at My name is Mike Tusaw, and you can contact me at mtusaw@rcmfs.com or give me a phone call directly at 312-212-3531.
There you go. Hit them up, listeners. And if you take him up on his other offer before. If you can find some positive comments about stupids from me on the old program and send them to him, he'll give you a free quarter's worth of trade. That's not bad. Maybe he'll even sit up at night babysitting your puts and rolling your puts for you while you sleep. That's worth it in and of itself. So do a little homework, get a free quarter's worth of trading. I would take him up on that if I were you. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, subscribing, all the fun stuff that you do, including joining us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. And we'll see you right back here on Thursday for more The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.